Hey everyone, welcome to my new YouTube video on short straddle. In the first video, we spoke about a different perspective to short straddle. We saw how we can use short straddle in a bullish market, bearish market, and also in a range bound market. So this is the second video in the same series where we'll be exploring when exactly we can adjust the short straddle, when exactly we can cut the short straddle. I hope you liked the first part, and I also wish that you liked the second part also. So let's quickly move on to the video, and meanwhile, if you're liking the content on this channel, do not forget to hit the like button, share this video, and subscribe to my channel. Hey everyone, welcome to the second part of the short straddle video series. And the second part is about short straddle exits. So you might be wondering why exactly we are talking about exit straight away without even discussing about adjustments or trade management. The reason is because I believe that the exit in any trade is the most important thing, because it is not the entry which makes us the profit, but it is the exit which actually determines whether we are going to make a profit or loss. So for example, let us say I ended up shorting a call option at rupees 200. Once I have taken the entry, I can either exit this option at 250, or I can exit this option at 150, or I can exit it in and around 200. So where I am going to exit is actually going to determine whether I'm going to end in a profit or loss. If I have shorted this option at 200 and if I'm taking exit at 150, then I'm going to have a 50 rupees profit. And similarly, if I exit at 250, I'm going to have a 50 rupee loss. In this video, I'm going to share certain rules which will help you come out of short straddle. Because the most important thing is not what you do when the trade is going right. What you do when the trade is going wrong determines your profitability in the long run. Because if the trade starts to go wrong, then your psychology will become messed up. And once your psychology is messed up, you will start to take irrational decisions. And the entire crux of this video is to make you avoid taking those irrational decisions by giving you a proper framework on exiting the trades. I will be sharing 3 critical points which you can follow without having to think twice. Once you hit these 3 critical points, you can simply end up exiting your short straddle and forget about any kind of adjustments or trade management. First, I am going to share one of my real trade experiences to make you understand why exiting any trade, for that matter, not just short straddle, at the right time is going to be very crucial in your trading journey. So this example dates back to year 2020 during the COVID crash. The date is 12th March 2020, which happens to be an expiry day. Here you can see that we had already had a very big gap down in the market. So the gap down was close to around 5%, and the market had closed here and we opened almost around 5% lower. So now I have just zoomed into the chart, and this is the 15-minute chart. So market opened somewhere around 25,200, and you can see the very first candle, the market actually bounced up. So I thought, okay, 24,800 is supposedly a very strong support for the market, and most likely market won't break this support of 24,800, and the market actually has bounced. And I had never seen the market hit a 10% circuit. So that is because from the day I started trading, I had never seen the market actually go down well below 5 or 6%. And that too, after the bounce, I got convinced, okay, the market might not come below 24,800. So what I saw is this 24,000 put option, which is almost around 10% lower, was trading close to around 80 rupees. That means I can simply sell it and make 80 rupees and close my expiry day. And then what happened? Slowly the market started consolidating and coming down. So once it broke 24,800, this was the time I had to take my exit. So I don't really remember what the price of this option was. Maybe it might have been around 130 rupees, 160 rupees. Doesn't matter. I should have taken my exit and closed all my position. I was overconfident that it is not going to come below 24,000, and I continued to hold the option. So the market fell, then the market started to take support. By this time, my psychology was already messed up because I was in a huge loss. So back then, even leverage was there. So I didn't want to accept such a big loss, and I continued to hold the position, believing that market is not going to come below 24,000. So then the market actually consolidated for some time, and by this time the option had already come below 80 rupees. So the time was well over 130 and the price was well below 80 rupees. But I didn't end up booking my option. Then the market started to slide, and once the market started to slide, it went well below 24,000 also. And at this time, I really started to panic. My loss suddenly increased to such a big amount, I didn't know what to do. So, this option, which I had shorted at 80 rupees using leverage, was now trading around 380 to 400 rupees. So, the price had almost gone up 5x. And then I had to book the biggest loss, which was almost close to around 26% of the trading capital in a single day. And this is how, if you don't exit at the right time, trying to hold on to the position, believing that you will be right, believing that something will happen where you can end up making profit, or sticking on to your view very rigidly, even though the market is showing so much of bearishness, I am not ready to accept it can go below 24,000. All these are small aspects which can completely ruin your trading career. It just requires one day to destroy you completely. And that's the reason exit becomes the most important thing in any trade. When things are going your way, when things are positive and everything is going your way, most likely you're going to have a good exit. But what you are going to do when things don't go your way is what actually matters. It took me close to around 16 to 18 weeks to recover that particular loss, which is close to around 4.5, 5 months to recover what we had lost in a single day. And that's the reason I'm going to share a framework in this video which is going to help you make the exit. So the very first point is exit all the trades when you hit 1 to 1.5% loss on a single trade. Let us say I have taken a short straddle and the market starts moving against me. I do multiple things. Let's say I do a lot of adjustments, the market is still moving against me. And the moment I hit 1 to 1.5% loss on my capital, I simply should close the trade. Forget about everything else. It might later come in your favor, it might not come in your favor. Just exit the trade at that moment, because the earlier you exit, it is easier for you to recover when things go well. So it will just take one good day to recover what you have lost on a bad day. This 1 to 1.5% is something which I follow. So you can also change it to 2, 2.5, or even 3%. But I would definitely not recommend to lose more than 3% per trade. So I will tell you why exactly I ended up choosing this number of 1 to 1.5%, and this is purely based on my trading performance. So if you actually look at our trading performance, simply come to quickalpha.in, then you can go to services. Under services, select trade management services, and here you can just click on view performance. I'm going to attach the link directly in the description so it becomes easier for you to go and check it out. Here we have 2020-21 performance summary and 22-23 performance summary. And when you look at both, so when you click on view, so you can see in 2020-21 we have generated a total return of around 23.84%, and in 22-23 we generated a total return of 31.83%. So on an average, I'm able to generate close to around 25% a year. And this turns out to be close to around 2% per month. Now, if I let my loss exceed 2% a month, then my entire month is wasted, because the entire month I will just try to recover what I have lost and I wouldn't have made anything more. So that's the reason I generally keep it to 1 to 1.5%. If you're making anywhere around 3 or 4% a month, so you can also have slightly higher risk appetite. If your loss is small, you can easily recover it with a single good day of trade. But if you let it extend, then it is going to cause you a lot of trouble moving forward. So that's the reason I recommend set your risk appetite and then make sure you stick onto it irrespective of what happens. You just have to exit and avoid over trading. The second point is more with respect to short straddle itself. And whenever you see a big gap down or gap up where the opening itself is well beyond your break even, you simply exit. Stop thinking that okay, market might actually end up coming back or market might come in my favor anytime later. So let me just give you an example where cases have happened that it has opened well below the break even and when you can actually end up exiting. So here I have opened the stock market simulator and let me just go to the date of March 9th. So March 9th was a Thursday. So here let us assume around 2:30 you ended up entering next week short straddle. So you took a 41,400 call short, 41,400 put short. So your break even is 40,785 and 42,000. And then as you start to move forward, so let's quickly start moving forward by 15 minutes. And then what you get to see is very next day, the market has opened at 40,580. So you can see the spot rate right over here. So it is around 40,600. So you had created 41,400 short straddle and the market has come down almost around 800 points. What you have shorted at 288 is now trading at 800 and what you have shorted at 300 is now trading around 80 rupees. And this is a perfect example when you shouldn't even think twice and just exit the trade. Don't hold the trade expecting that the market might bounce and you might end up making some profit. So, the most ideal decision you can take here is just to book everything and call it a day. So, these are small and minute things which is going to help you as traders in the longer run. And that's the reason it is really good if you can make sure you stick to these rules. So this is the second rule. So different trades can be handled in different ways. So right now, since we are only dealing with short straddles, so stick to this point that whenever there's a big gap up or gap down, just exit the trade. Now coming to the last point is with regards to the adjustments. So we still haven't discussed what are the ways to adjust a simple short straddle trade. So we'll be doing that in the upcoming video. When I say limit your adjustments to 3 or 4, what I really mean is, let us say the market starts to move against you and then you end up doing an adjustment and then the market further starts to move against you. You end up doing one more adjustment, and right after you do the adjustment, the market starts to come down, and you again end up doing one more adjustment. So, here you can see that you're doing multiple adjustments, but you're not seeing any improvement in position. It is because the market is moving completely against the trades you take. You're not in a comfortable position in this particular trade because whatever you're doing, the market is reacting completely opposite. So things are not going in your favor. So in such cases, it is not worth to keep on adjusting the trade again and again. So there is no issue to adjust the trade if things are going in your favor. Let us say you're bullish on the market goes up and you're already in profit, you make a small change. Again, the market goes in your favor, again you make a small change. In this case, there is no issue. The issue only comes when you are continuously adjusting the trade, but things are also not going in your favor. In that case, make sure that you limit it only to 2 or 3 adjustments. It might happen that you are continuously adjusting your trades and you have not hit your risk limit of 1 to 1.5%. So this is not hit, but you are simply adjusting the trades again and again. So that is something which you have to avoid. If you are seeing that the markets are not going in your favor, things are not working out, you are not in a comfortable position, so then there is no point in simply churning the trades again and again. It is always wise or always optimal to get out of the trade. You can come fresh maybe the same day or maybe the next day and start trading again. So the summary of this entire video is basically to cut your losses small so you can define your loss based on how much you're making. Then whenever there's a big gap up or gap down, you simply exit the trades. And finally, limit your adjustments if things are not going in your favor. Even after 2 or 3 adjustments, if you see that the position is not favorable or there is no significant improvement in your M2M, then it is simply better to exit that trade and take a fresh trade. And this point of limiting your adjustments only hold true if things are not going in your favor. If things are going in your favor, then you can keep modifying your trade to make it work much better in your favor. So this is the crux of this video, and I hope that you guys end up following this point, whether you do it for short straddle or any other strategy. Just make sure you keep this as a thumb rule or a framework so that you end up exiting your trades at the right moment before the loss becomes really big. So once you follow that, you will start to see a notable difference in your psychology and also in your trading performance. Do try it out and let me know in the comment section. Maybe some days later you can revisit the video and let me know in the comment section whether it helped to improve your performance overall or not. With this, we also come to the end of this video. We have so many things to discuss, from trade management, adjustments, position sizing, margin management, and much more. And that's the reason this is pretty lengthy series on short straddle. Again, we'll be mostly catching next week or the other next week with one more video on the short straddle series. And finally, if you have liked this video, do not forget to hit the like button, share this video, and subscribe to my channel. Thank you.